I'll give you my thesis on how it could happen, and maybe I'm way off. I don't know, but it made sense to me, and I'm the only one saying it. So either I'm stupid again, or I'm brave enough to say something I believe in, and couch it by saying I don't know, but it makes sense to me. So okay, all of the things I said to you: broke, insolvent, uneducated, don't make anything. And AI is coming to destroy 50% of entry level jobs and nice white collar jobs all the way up. So what do we do? What do we do? How do our kids make any money? You guys already say it's got to be quick because it's too expensive. How about your kids? How expensive is it going to be then? What's going to happen to the dollar? And so we must bring back manufacturing. Trump's talked a lot about bringing back manufacturing, but what does Triffin's dilemma says? As the world reserve currency ain't going to work. Your dollar's too expensive. No one's going to buy your stuff by first having to convert to a high dollar. Case in point, the dollar's been going up and oil's been going up. Who does that affect the most? Everyone else across the globe who has to first buy dollars to buy high price oil. The dollars are high, the oil's high. They're getting killed, right? So what do we do? What do we do? How do we sell product at a very expensive dollar if you have to first convert to dollars way up here to buy the product? Why not just buy it from someone else around the world where you don't have to go way up here to buy dollars? That's the theory. That's why Triffin's dilemma says you'll never have a reserve, or you'll never have manufacturing base if you're the reserve currency over time. So what if the theory is to shed the reserve status, quietly default on it? How would you do that? So there are three crucial pieces. The first piece, well, I'm going to give you one of the three pieces without explaining it until the end. Since Trump won the election in November, we have imported, I don't know how many hundreds of billions of dollars worth of gold every month. And that is something that's never happened before, ever, never happened before. And it's month over month over month over month over month over month over month. Let me see if I can give you, I don't know if I can real quick, the numbers that we have seen. Don't know if I can. I don't know if I have these numbers handy, but we have seen tremendous amount of gold come into the country for the last 16 months, more than ever, right? And it's weird. No one's asking who's standing for delivery every single month for billions and billions and billions and billions and billions worth of gold. Why is no one talking about it? Just give me 10 more seconds to see if I have some numbers here. I don't know if I do. So we saw 4.2 billion in gold leave the exchange last week alone. 2 weeks ago. Actually, I take that back. That was out, maybe it was. That was out of GLD. Excuse me, I misspoke. GLD, 4.2 billion left. And that's another discussion, how they take gold out of the ETFs, the primary custodians, and how they do that in a private manner. But here we go. So we saw 2.9 for silver. Crap, where the hell is gold? Here we go. Shit. I guess I don't have. I have silver. Anyways, I guess it really doesn't matter. The point is that we've seen billions and billions and billions and billions leave the COMEX every single month, or delivered to COMEX every month, and a lot of it leaving. And no one's asking what's this all about. Like literally, it's never happened this way. We've always been net exporters of gold, and since he won the election, every month, massive amounts coming in. Shh, don't tell anyone. All right, so keep that in the back of your mind. Now, we talk about the Genius Act. What is the Genius Act? Most people don't know, and it goes into effect next January, if not sooner. And the Genius Act is law already, and it says that anytime money moves in dollars across the globe forever, it will be via stablecoin on a blockchain network, right? Stablecoin, and I don't have to explain this to your viewers, but just for the hell of it, you know, the blockchain is the highway, the stablecoins are the cars. They're backed by short-term treasuries, 90-day or less. Now, first thing that does is create synthetic demand for the treasury. People are freaked out about the new Fed chair who's hawkish and going to raise rates. Yeah, bullshit. Every time money moves across the globe from next year on, any time. Remember, the Fed can only control the front end of the curve, the overnight lending rate, right? So if every single time money moves, whether it be buying a pack of cigarettes or a new villa in France, if you're paying for it in dollars, I don't care. It will move via blockchain, backed by stablecoins, backed by 90-day or less short-term treasuries. Synthetic demand for the treasury, which collapses short-term interest rates on the front end of the curve, rendering half of what the Federal Reserve does relatively neutered. And people say he's trying to end the Fed. Maybe he is, right? So it and also kind of deals with money creation. In many respects, it really does curtail what the Fed can do. So, but you're creating synthetic demand for the front end of the Treasury. You're going to have money coming in, buying treasuries, which funds the government on a short-term basis, keeps rates low to incentivize trade and borrowing and all this kind of stuff, right? Okay, I get that. Well, what does that do with manufacturing? Well, I'll get there. So you look at a company like Tether, right? USA Tether, which their token is already Genius Act compliant, is one of the biggest benefactors of the Stablecoin Act. They already are pretty much the biggest stablecoin player on the globe. And guess who just became the CEO of this new division of USA Tether? Oh, that's right. It's a guy named Bo Hines. Well, what was Bo? Bo was Trump's crypto czar through August, made the rules on a lot of this stuff, and now is running USA Tether. What does Tether have? Well, Tether has the largest stockpile of gold in the world outside of central banks. They've been buying roughly $1 billion worth a month. And they've got $12, $15 billion worth of gold that they are holding. Now, when we talk about devaluation of the dollar, you mentioned FDR confiscating gold. What did he do when he confiscated gold? Gold was $20 an ounce. That coin, 20, paid everyone $20.67. You guys get 67 cents, dozen eggs or a nickel. That's a lot of money back then. Everyone's happy. Then he immediately devalued the dollar by 40%, making gold $35. When you devalue the dollar, you devalue it not against the dollar index, which is the melting basket of ice cubes that are melting. You devalue it against the one global neutral asset. Globally, gold. Everything else falls or rises to against gold, right? So when Tether is taking all of the, and what did the Clarity Act say? Oh, that's right. You cannot transfer interest that is backing the stablecoins. That stays with the issuer. So if you and I are trading, I owe you money, I send you $1,000, it'll look the same out of my bank account. It just gets to you in 7 seconds, just like Venmo or Zelle. And stablecoin is created when I send you the money. When you receive it, it's burnt. We can't keep the interest. The issuer keeps it. So what's the issuer doing with it? Oh, they're buying gold, hand over frickin' fist. What does that do to the dollar? Devalues the dollar. Not the dollar index, gold devalues against gold. So they keep buying it and buying it and buying it with all the interest created. And pretty soon, anytime money moves anywhere in dollars, there'll be interest that will be accruing that they can't transfer. So you continue to buy gold, it goes higher, 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 higher. The dollar goes lower, 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 lower. This is how you would begin to have an environment where you can sell your product to the world in a devalued dollar. Dollar was down 10% against the dollar index last year, 80% against gold. Gold is the one neutral asset. All right, so interesting. You might be able to start doing that. What else? What about the back end of the market? Well, that's where it gets interesting. And this is where I had Judy Shelton on my show twice. Once I interviewed her and once my co-host Michelle McCory interviewed her. And in both cases, she said the same thing. Now, who is Judy Shelton? She is was Trump's nominee to run the Fed in 2016. Due to partisan politics, shockingly, she wasn't confirmed, but she is one of the most brilliant people I've ever talked to in my life. Fascinatingly brilliant. And she is all over X. She has a book called Good as Gold. It is best-selling. And she said to me and Michelle and all over X, she said, Andy, in no uncertain terms, when I was part of Trump's transition team as his advisor, he said to me that on July 4th, 2026, which will be the biggest day of his presidency, the 250th anniversary, he will reintroduce sound money to the world by backing the back end of the bond market with gold, starting with a 50-year treasury, ultimately doing 5, 10, 20, 30, and 50-year treasuries, redeemable in gold with the 5, 10, 20, and 30, zero interest. The 50, maybe 1%. Redeemability in gold. That's interesting. Let's think about that for a second. So
So
no
she's
interest.
saying that that's what he's going to do.
That's what she is saying. I'm not
Wow.
saying it's me. She's saying it. Go watch her on X. You'll see that. So if that's the case, right? Let's play that out for a minute. So if I were to sell a $20 million bond, someone takes the other end of it. First of all, there's zero upfront borrowing costs. I get the 20 million, right? They buy the bond. I owe it, or whatever the bond costs. I owe it in gold at the end. Whatever, there would be a discount there, but I get the money up front for the bond sale. They get the return in the end in gold. Now, the sillier I am with my fiscal and monetary policy, the higher the price of gold goes, right? So here's how it works. You have zero upfront borrowing costs to bring back manufacturing. You bring back manufacturing at zero upfront borrowing costs. You owe gold at the end, right? So that's interesting. That sounds good. But what does that do? So right now, let's just say gold's 5,000 an ounce. I know it's come off a bit. That would be 4,000 ounces. The Van Eck Group, Van Eck Funds, their mutual fund company, they came out and said, their emerging market bond team said, there's reason to think that the dollar could lose reserve status. If it did, we see gold going as high as 139,000 an ounce. They said it, not me. Divide that into 20 million, that's about 110 ounces. So let's play this out.
If you're enjoying this was actually taken out of a piece of our live stream where we go live every Tuesday and Thursday at 12 p.m. Eastern. If you want to see the full version of this episode, you can click the link in the description down below. But for now, back to the clip.
We soft default on the reserve status to bring back manufacturing, or our kids or our grandchildren are dead. If we don't do this, we're done. We're broke, we're insolvent, we're uneducated, we make nothing, and wickedly in debt. Okay, what do? Well, we need to put people back to work making things again. Okay, so Triffin's dilemma says you can't do it. The reserve currency, the dollar is too high, so we quietly soft default on the dollar by letting gold go higher and higher and higher and higher, and the dollar goes lower and lower and lower and lower. The dollar is being devalued. And how do you get gold higher? Every time money moves anywhere, the interest, I don't care if it's issued by American Express or Bank of America or Tether, that has to go into treasuries. That the treasury yield is not transferable. If they continue to buy gold, pushing the price of gold to the moon, well, your dollar just got massively devalued, so you have a chance to sell things to the world. That's what they've all done to us. And number two, well, what did Judy say? Now, here's where there's a little bit of connecting the dots. This is what I've done and have the courage or the stupidity to say. Well, is there any coincidence that Bo Hines is in there now? I mean, remember all the trouble that Tether was in? What happened to all that? Why don't we ever hear about the trouble that Tether's in anymore? What if they went to Tether and said, here's what you're going to do for us. You're going to accumulate all this gold with all of the interest that you get on the treasuries. You're going to buy gold. You are now the largest stockpile of gold in the world outside of central banks. You're going to keep doing it. Gold's going to go higher and higher and higher and higher. It's not going to be done by the U.S. government. It's too obvious, but you're going to do it for us. You're going to be the primary benefactor of the stablecoin bill, USA Tether, and you are going to continue to do this with the proceeds, and quietly that gold will be sold to the U.S. Treasury over time. We're going to buy it from you. You're going to be richer than you can ever imagine. You guys and your future generations will never worry about a thing again. But that gold, and you're not in trouble anymore if you do this, you're going to buy our treasuries, you're going to take that interest, you're going to buy gold, and that gold will be sold to the U.S. Treasury. Because what did Judy say? Well, we got to back the back end of the bond market. So the first thing you would need to do is bring back the gold. Oh, that's right. We've been doing that for 16 straight months, and no one's asking who the hell is doing it and where's it all going. Second thing you would need to do is create some vehicle to create synthetic demand for the front end of the Treasury and take that interest and buy gold. Oh, we did that with the Genius Act, and the Clarity Act says you can't transfer, so perfect. And then all that gold ends up in the Treasury, and if Van Eck Funds is right, and the dollar does lose reserve status, how do you get people to buy our bonds? They're not going to want our bonds redeemable in dollars that are getting killed. Redeemability in gold, held in an escrow account somewhere to validate it and to inspire confidence. But redeemability in gold, that's interesting. And if the price of gold keeps going up and up and up and up, what that means is the issuer who owns the gold at the end would have to pay back way fewer ounces of gold at the end of the time period. So you bring back manufacturing at virtually no upfront borrowing costs and build new high-tech manufacturing facilities with very low costs involved, sell these products into a wickedly devalued dollar to the globe, around the world, or to the United States. And if you're going to be more mercantile, but at affordable prices. And the only negative byproduct I can see of doing that is you'll have universal basic income for a while because the shelves will be more bare and the cost of goods will be more expensive until we're able to, we're used to going to Walmart and getting stuff cheap, but that is because the world took our dollars for everything and then took those dollar reserves and put them in treasuries, which lowered interest rates, which kept our asset prices high, the goods we buy at Walmart cheap, and it was a great deal. We felt rich. Our 401k, our home, low interest rates, high asset prices, cheap goods. Well, that's going to change, and it has to change because if it doesn't change, you will have a situation where there are very, 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 very wealthy people, the people who run businesses and are way more efficient as everyone else gets fired, and AI runs a lot of the stuff that used to be done by humans, and your kids are going to have no shot at the American dream, or we go back to our roots and we bring back manufacturing and shed the reserve status. Now, one last piece to all this, if you look around the globe, all you continue to hear is all of these countries trading their local currencies, not a currency, their own currencies over Enbridge or SIPs, settling in balances in gold, the neutral asset. What would that do to all these countries? Well, it would strengthen their own monetary existence. Instead of strengthening ours, they have to keep their house in order. And they trade their currencies with each other. And if I don't want to hold your currency for whatever reason, then I will settle it in gold. And what are they doing with the Shanghai Metals Exchange? Putting metal exchanges all around the Belt Road Initiative. So that Saudi Arabia doesn't have to go to Hong Kong to get their gold, because remember, when gold leaves China, it comes out of Hong Kong. No, they'll have their own vault in Saudi Arabia, and everyone will sprinkle gold amongst these vaults so that when we settle imbalances with all of our trading partners, it's done in gold.
If you're enjoying this was actually taken out of a piece of our live stream where we go live every Tuesday and Thursday at 12 p.m. Eastern. If you want to see the full version of this episode, you can click the link in the description down below. But for now, back to the clip.
We trade our own local currencies, and we are not reliant upon the dollar or at the whim of the United States, who can sanction us, who can kick us out of SWIFT, who can inflate away their dollar, who can print money to create bonds and buy it themselves if the Federal Reserve. It's immoral. They're creating money to buy bonds, and we're supposed to hold those bonds and sell you our stuff for stuff you just push a button and create. We've lost trust. And a system that is no longer backed by gold is backed by trust. And if you lose trust, your girlfriend cheats on you, trust me, honey, it won't happen again. And then she's out till 3 a.m. the next night. Is there a problem? Do you trust? Or is that going back in your head again? What the hell is going on? How many people, fool me once, shame on you. Fool me 75 times, shame on me. How many times can the world believe that, that the dollar system, this hegemony, is a good thing when we are proving to them that it might not be, through irresponsibility and sanctions and aggression. And you look at China, even their Shanghai Cooperation Organization, which is the largest regional financial and military organization on the planet. It is the Shanghai Cooperation Organization. You look at BRICS, it's all voluntary. There are no mandates they have to follow. You look at the way that their presidency goes. It rotates every year. Not one entity holds it. Cooperation. So could it be done on purpose? You bet your ass it could be, because there is no other way. We can't tell the world we're defaulting on the reserve status. Instead, let's push them all away. Let's put tariffs on them. Let's go around and be aggressive. Let's do these things, make people say, what the hell? We don't want dollars anymore. Is that what they're trying to do, to create this event? Now, I don't know. Maybe. I don't know. All I do know is that if you're not a contrarian, I think you'll be a victim. And if you hold your wealth in dollars, you're going to go broke. I do believe that. So, whatever the rationale is, I will tell you that if you can think of a better way to bring back manufacturing, let me know. Because if we retain world reserve status, it won't work. And if you can think of a way that your kids will have a bright future in an environment where we don't make anything and we're wickedly broke, and population's getting older, and AI is here to really mess with things. How do we do that?
Hey, you made it to the end of the clip. That means you're probably enjoying this. And if so, just know that you can catch us live every Tuesday and Thursday at 12 p.m. Eastern. And if you want to see the full version of this episode, you can click the link in the description down below. Otherwise, YouTube thinks that you will enjoy this next.